Good morning, everybody. It's Christian from Serene Education with the 4 majors and notes update for the 1st of March 2013. Hi guys, hope you've had a fantastic week. Apologies for not having the video out the last couple of days. We've been doing a mentorship with one of our students. I'm going to just crack on and do an update for the end of week on the 4 majors, starting with Euro against US dollar. Let's have a look at the weekly to see what's been happening. Okay, so what we've seen over the past couple of months, well, the past 6 months in particular, is we've seen price or euro gaining a lot of strength against US dollar in recent months. Okay, and in doing so, moving higher. However, as it's reached the institution moving average recently, price has actually failed, bearish engulfing, and since then price has actually started to fall, falling back to price support and resistance levels. In particular, these major lines across the charts in the shape of these dark black lines, which are my weekly fib retracement areas. Very important, the 23.6, 38.2, the 50, etc. to the upside. So as you can quite clearly see, a failure here at 38.2 at the institution moving average on my weekly at a price support and resistance level has seen price now falling to the downside, and doing so, testing recently, last week in particular, a prior high, and subsequently a slight pullback at the start of this week. However, that sentiment is still dragging price to the downside and heading towards that psychological round number here in the shape of the 1300 mark. So what it's done is it's broken this intermediate uptrend. We know that the long-term trend is very much negative. You can see the most I pull out. You can see I'm looking at a chart way back in 2008 when things really got sticky. You can see quite clearly that the highs have got lower over the years leading up until this year. Swing low, and are we seeing near term the start of potentially a high, an all-time high for this particular pair being capped by the institution, which is going to make it lower than this, which would mean it will be lower than that, which means lower than that, which means that we are still very much in a long-term negative trend. So we've seen positiveness recently. However, the long-term outlook as it stands at the moment now looks potentially to be negative. So we need to see the 13,300 being broken as soon as possible. So leading up into the end of next week, can we get below this area here? If we do see that, then ultimately we're going to see price heading towards the 12,700, which happens to be a viable support and resistance over a number of years in the past, and then heading towards that all-important psychological round number in the shape of the 1200 mark. Why 1200? Because if I just zoom out again on my weekly chart, you can quite clearly see back in 2010 we had a support on this pair. We had another one, quite a recent one here in July, August of 2012. So psychologically, if we break this near-term support over here at 1300 and get below 12,700 in particular, you can see, then there's less noise going forward to the downside, and that's a huge drop, guys. So it'll be interesting to see what happens in the next couple of weeks. So what does it mean for us, guys, intraday? So taking it to the daily, you can quite clearly see that 1300 is right there, and you can see over the past couple of days, price has rallied into here, however, come unstuck. There's a lot of hesitation in this area here. So between 1305 and 1300, a lot of consolidation for this particular pair, as price is well aware that we're going into a psychological round number in the shape of this black line here at 1300. We had to get below that black line in order to see price falling, and if it does get to do that, then ultimately we should be looking at down here at 12,900, which will bring us back towards our institution moving average on our daily. Get below the 12,900, then we should be seeing plain sailing towards that prior swing here at 12,700, as I mentioned on my weekly. Get below that, there's a slight hesitation at 1240 before we head to that all-important round number down the bottom here at 1,200, which is our long-term weekly monthly low on the chart. So as it stands now, what has price been doing the past couple of days in particular? We saw a bounce, just corrective bounce recently. However, yesterday's bearish engulfing candle has cancelled out that sentiment, and now prices trading at the lower end. Very indecisive over the Asian session last night. Very small pullback, and if it remains that way throughout the European session this morning, we could see the US session actually drag it lower towards that 1300. We need to see that 1300 being broken as soon as possible. The longer it takes for 1300 to be broken, the more likely is we could see a pause or consolidation bounce, and then we should be heading back up towards this intermediate trend low swing. You can see quite clearly here, if you take the bodies, you take the wicks. It's important. If you're taking the wicks, then that should be ultimately your line, and if that's the case and we find support here, then price is going to be bouncing back up towards this area here, roughly around the 13,200 mark. failure than that, we would need to see 1300 break in. So we are quite close. There's still 50 pips nonetheless, guys, but you'll be trading a lot of indecision intraday. I just want to show you guys that. A lot of hesitation recently from the 25th. You can quite clearly see price very negative, but going into the psychological run number here, 1300, price has been very hesitant to go any further, and doing so, pulling back. And pulling back to 1500, which happened to be the price support on our 4 hour, and failing to actually move higher. So the sentiment's still looking negative. Very much swing lows, institution moving average above price, a lot more red on our strategy template, guys, which tells us we should be looking for negative sentiment. 1 or 2 areas of blue, however, you'll be trading against major support and resistance levels, so there will be no trades. Okay. On to Sterling. Sterling's had a major drop through the start of 2013. Huge shooting star here at resistance level at 1620. Has seen price really drop with a lot of momentum. Things not really panning out that well for the Great Britain or the British Isles in terms of the economy, etc. And in doing so, we've seen price really falling with a lot of might over the past couple of weeks, and in doing so, breaking some major support and resistance levels in the shape here in particular at the 15300. This is a weekly chart. You can quite clearly see I've just panned out, so I'm taking all the way back to 2010, guys. You can see July, August, November, December of 2010, going to latter part of 2011, the mid part of 2012. So a lot of support here. So psychological support for this pair, and each time she's reached this area, she's bounced quite nicely to the upside. However, still being capped, not really making any higher highs. You can see we've fallen all the way from 2008, but recently you can see that these highs are getting lower. Okay, so we have been in a very extended consolidation pattern. Very price not really moving higher than that all important long-term high that we saw back in 2009 here, just short of the 1700. Since then the highs have got lower and lower, and now we're being squeezed. You can see that as I zoom in on my weekly chart. You can see we've been squeezed now, and we've had a break. So now, as long as it remains below 15300, the sentiment is negative. We would see a potential consolidation, which we're seeing quite right now on the charts, but as long as that consolidation is quite short and abrupt and doesn't move further back towards the 15300, then it's telling us the sentiment that dragged up below this area here is still very, very strong, and we should be seeing price rallying towards that all important low point. We got one here at 1485. Primarily this is a prior consolidation, but we'll head down towards these areas here at 1442.50 mark. Get below that 1442 level, and the last low we saw was the one we saw back down in 2009, which is way down there at 13,500, which is a long way away, guys. So what does it do for our weekly daily chart? Here we go. Straight away you can see the sentiment heavily favoring the bears. All my moving average above price, swing lows depicting downside movement, and I've plotted that 15300, which is my weekly major support, long-term support at 15300. Price is now broken through it. Very indecisive once we've got through it. So as long as it maintains below 15300, we should be looking for further negative sentiment. It will only start looking positive again once we get above 15300. So you can quite clearly see here, I've written a little note to myself. 15200 is my weekly fib projection from the all-time high that we saw recently, which is the 78.6 level at 15200. So as long as it's capped by the 15200 now on my intraday charts, this is going to be my psychological resistance level intraday. And if we do see that, you can see quite clearly that price has been very indecisive the past four days. A lot of spinning tops, no clear direction. It's all happening below the 15300, which is still okay. As long as all this hesitation happens below 15300, then what we're looking for now is a bearish engulfing candle on our daily to confirm that price is happy now at the underside of 15300, and we're going to see further shorts to the downside. So plotting those lines on my 4 hour and my hourly are important. There's my dashed line 78.6, which is my weekly area. You can quite clearly see the resistance over the past couple of days. Price is not wanting to go higher than that, and doing so, it's not forming any higher highs, which is still telling me that price is still looking negative. Okay, you can see I drew a trend line on here. It has been breached. However, I can take that away now because that's now null and void. However, I'm being capped. It's still capped by this 15200 mark, and doing so, you can see the 50 pair moving averages in play right now as we speak. It has helped as resistance in the past. Notice the histogram on either side of my strategy template still telling me very much red. So it's telling me I should be looking for negative sentiment, and as long as that price maintains below 15,300, that will be the total. That'll be the outcome. We should be looking for negativity, not positiveness. And if we get a bearish engulfing candle here, then we should be targeting these areas down here, back again at 1505, which is a good couple pips away. So just be aware of it. Hourly charts. Just want to bring up the hourly chart so you guys can see 15,200 at intraday resistance level. This is my weekly 78.6 fib projection level from the highs. Notice price not wanting to go any lower, and in doing so making higher swings, but being capped. And look what the institution moving average is now. So are we going to see the institution moving average pushing price lower later on today sometime? It remains to be seen, but if we are to see any further negativity for this particular pair, we do need to see a nice bearish engulfing candle to confirm this 15,200 is very much a negative resistance area, and then we'll target that short-term target back towards these lows here just prior to the 1505, and then all the way down to those daily and weekly lows. US dollar Swiss franc is the next one. Let's have a look at the weekly for this particular pair. Very indecisive, nonetheless, still very much in a negative trend. Why? Because the institution on our weekly is still very much above price. This green line over here, you can quite clearly see is being capped, and you can see since September of last year, price has pretty much just been consolidating, dropping, etc. You'll notice there's two types of, two colors of the horizontal lines. There's a reason behind this. The red ones are the fib retracement areas that I've taken from 2010. This move to the downside, you can quite clearly see we saw an extended trend to the downside before we saw correction. I want to see how far this correction is likely to pull back from this initial move to the downside here that we saw through is at the start of June in 2010. So it plots the 23.6, the 38, the 50, and the 61 in the red color. Since then, we've seen price bouncing higher. We've also seen a low point here in August to a current high that we saw at the end of July, if I'm not mistaken, and price is pulling back. I also want to plot those lines to see where it's trading. 23.6, the 38.2, which is smack bang on the weekly line here at the 88.50, so that constitutes a very strong support and resistance. The 50% in between that, where we've seen consolidation in the past, and the 61.8, which is also mirrored quite nicely with the 82 mark. So these two areas, 82 on the chart, and the 38.2 here at 88.50, are very strong support and resistance levels because of the fact that these two fib ratios actually mirror each other. In between that, you can quite clearly see that price has actually been consolidating. Through a good example would be here through September of last year, really consolidating in this channel through parts of November, going into December, and then we had the break lower. Since then, prices moved back again, not wanting to really drop any lower. So a lot of consolidation. Price is not really interested in moving lower. And if you look at what the US Swiss franc holds in terms of what it is, how it actually works, so you can quite clearly see that no clear direction on gold in particular, and you can see no clear direction on this particular pair. Gold's been falling back, so the US dollar has been strengthening because nobody's actually wanting to put any money into Swiss franc because of the gold prices, etc. like that. So it all stems in together. The one thing you need to notice is we're still making lower lows. Okay, the July high, we've had a little November high here, and last year we had a small one through December, and then you can see the one in January heading up into the December high up, but not failing to break it. You can see quite clearly now in this week we've seen a bit of bullishness as we stayed above that that weekly fib retracement area 930, and heading into this 50 period moving average, which actually has caused it or resisted it in the past. Okay, so ideally, if this is to be very bullish long term, we do need to see this 940 being broken. If we do see that, then we should be targeting the institution moving average here in roughly around the 965 mark. So on our daily, what does it do for our setup? You can quite clearly see a lot of hesitation, price being whipsawing over the past couple of months. A bit of blue, red all over the place. Notice the institution moving average is still above price. So long term, the sentiment is still looking negative. However, near term, you can quite clearly see that price is moving higher. So we are seeing higher swings. And in doing so, hence the reason why we're seeing near term positiveness on our template. Okay, we had a lot of hesitation over here. That price actually finding support above 930. and yesterday's bullish engulfing candle has seen price finding support. Now it's going to head up towards a psychological round number here at 940. We must be aware that on our weekly, as I mentioned, we have seen price failing here on 2 occasions, through the early parts of December and the mid part of January of this year. So we have to be very aware of that. We also have our institutions, so there's a lot of resistance, guys, potential resistance above price. So in order to not trade into a very strong resistance area, rather give it back to the market and get a clear defined break above 940. Get above 940, above that institution moving average would clearly tell us that price is still in favor of longs. So therefore, it'll make our lives a lot easier getting into trades where there's less speculative indecisiveness and more clear direction. Okay, so what we could wait over here is for potentially one or two things: a bullish engulfing candle to the upside, which would clearly tell us we should be looking for further potential to the upside, or we're looking for a bearish engulfing candle. Okay, as I mentioned, we've had 2 resistance level prior attempts of this 940 mark in the past, and we've both failed. Could we see another bearish engulfing candle here to confirm the price is likely to fall over yet again? And if doing so, we should be targeting back to the 930, and then if you wanted to, by price failing here, giving us either a tweezer top or bearish arami or something like that, then we take the low that we saw in February to this current, or to the new high if we do get a bearish engulfing candle, and then you take your February tracements as your target levels to the downside. For our chart, a lot of indecision, very, very small trading range over the Asian session, above the 930. So if price had to break back down to the downside, we would look towards price heading towards this consolidation area here. You can see quite clearly over a number of weeks price not really going anywhere very quickly, and in doing so wasting a lot of time and getting no real return for time invested. So it would be far better just to stay away from that, get a clear break, and then trade the break. But got the break, got to be well aware of that major support and resistance level above us. So as long as it stays above this area now, above the trend, it will still reattempt that 940 mark. Don't get me wrong, you can see quite clearly as price on the 4 hour has made her way up to the upside, a lot of consolidation areas. One over here through early parts of February, another one when it broke above the institution, procrastinating here for quite some time before we saw price heading up. So you can see break, consolidation, break, consolidation, break, consolidation, break. Are we going to see consolidation yet again in this area because we are now trading into a weekly support and resistance level high before we see price reverting to the downside? You notice there is a candle on this chart here. There's a lot of indecision candles spanning tops, bearish engulfing here. We would need to see a clear bearish engulfing candle to confirm that we no longer want to go high, we want to go short. Get below this trend line here, support at 930, and then we could be targeting to the downside, these areas over here in particular. You can see quite clearly price has marked it out really nicely where support and resistance levels are. We could use those as our intraday target to the downside if and when we saw price breaking this trend line. If it maintains above the trend line, then we're going to see price reattempting that 940 mark for the foreseeable future. On to the last pair of the day, the US dollar Japanese yen. Let's have a look at this particular pair. A lot of momentum since, what are we looking at, October, November, December of last year, rallying and breaking some major fib retracement areas. I took the all-time high in 2007 on my monthly chart, and you can quite clearly see the lows here at 76. Price bottomed out here at 76, and since then price has actually moved towards these areas here at 23.6. Nice move into it, consolidated, breakout, continued for the remainder of that month, heading into the 38.2. So now we're at 38.2, which is the 9400 mark. That's going to constitute near-term resistance on my daily. Quite clearly you can see 9400 here, my black line. A lot of hesitation as we head into here. And a couple of days ago we had a bearish engulfing candle. Price hasn't really taken that forward because it hasn't closed lower than the fib retracement. You can take the all-time low here in September, all the way to the current high here, and you can see that 23.6 is now my 90-50, which is my 50-period moving average, and the last consolidation area here. Price has failed to break below that, had a lot of indecision candles, however still above the 23.6, so it's still positive. We have a resistance level above price, but it's still positive nonetheless because we are still moving within a consolidative range at the underside, and it's still being capped. So what we want to see price really moving to the downside is this near-term area here at 90-50 being broken, the 50-period to be broken as well. However, you can see that the sentiment, the US dollar is still favoring some highs against the yen, and in doing so, moving tentatively to the upside and testing the prior consolidation area here at 9200. So as it stands now, you can see prices trading into the 9200. So on my 4-hour chart, you can see quite clearly I put here 93, which is the last price support. But if you had to do the 9200 here, there we go, that's where the current consolidation is, trading above it. As long as it stays above it, you can see on my 4-hour, price actually broke through the institution moving average not too long ago. However, it was failing to actually really take it down with any further momentum, because we were waiting for a more distinguished bearish engulfing candle. Notice this was a very bearish candle indeed. However, we saw a lot of pullbacks towards the end, so we saw a pullback. Now we're going to see a consolidation at the underside of 92, or underside of the institution. That failed to materialize because we saw a lot of indecision candles, a lot of candles with wicks, no clear direction, was telling us we shouldn't be looking for further downside, and subsequently prices now reverted to the upside. So we do need to see price trading below the 9200, below the institution, and in doing so it will be forming lower swings and also breaking out of this consolidation area here at the underside of 94, which is our weekly long-term support resistance line, and in doing so we will see a high, a consolidation high, and then price will revert back to these areas to the downside. However, as long as it trades above 92, above the institution, price will keep reattempting the highs here at 9400. So be aware of that. My hourly, quite clearly the institution is now above price on our hourly time frame. However, you can see near term price was capped by this support here. Price failed to actually break lower than that to rally to the downside, and in doing so price has now bounced. Notice there's a lot more weight to the up of these candles, and in doing so dragging price to the upside. A lot of hesitation through here, squeeze pattern, and then we had a break. Trading above 9200, price has now found support, and over the past couple of days hedging higher into the institution. As long as it maintains above 92, there's more likely for price to head higher towards that 9400 mark, which is our weekly resistance level to the upside. So very, very tight range. Ideally we'd like to see the Asian session. You can see yesterday's high has not been broken. The Asian session last night could not break above it as well. So we'd like to see a break above that, but you have the institution, so I'd rather get a nice bullish engulfing candle above 93, get above 93, which we know is a major support and resistance level, and then we could actually look to target or profit from 93 to 94. There's some nice movement there, guys. So be patient, wait for the break above, and then trade it to the upside. If it fails to come, we'll look for a bearish engulfing candle at the underside of 93, where the institution is, to push it back low, and then we head towards 92, and then back to these lows here that we saw roughly around the 91.10 mark. That's it for this week, guys. I hope you have a fantastic trading day. Please look at any news announcements to see if it's going to factor in today's price. We do have a lot of news across the board for Europe, the Swiss franc, sterling in particular. Then we go into this afternoon, we got news out for Canadian dollar, the loonie, and then the US dollar this afternoon. So there's a lot of news. Be aware of it, please, guys. Take it on board, factor it in, see if it's how strong the news is likely to factor into price action, and then utilize it. Other than that, back it up with sound money management. If you are using this template, please follow the rules of it, okay, and have strong money management to back it up. Otherwise, have a fantastic trading day and have an even better weekend with family and friends. And I'll see you on, we have students this weekend, so I'll be doing my analysis again on Tuesday next, apologies. We have students on Monday. Okay, so I won't be doing my video analysis on Monday, but I will be back again on Tuesday morning as per usual. Have a great one. I'll see you then. Until then, trade serenely.